Hello friend, welcome to my video. Here's a question that should keep you awake at night. Are you ready? What if the biggest opportunity you've ever seen in your life is actually the one that made Nvidia more valuable than the economies of many countries, that brought tech stocks to the top, and that all the CEOs in the world are constantly talking about? What if it's not an opportunity? What if it's a trap? Be careful, friend. We all know what people are thinking. Come on, artificial intelligence is too big. Artificial intelligence is everywhere now. Artificial intelligence knows everything. Perhaps they're right, but think about it. Those who lost everything in the year 2000 thought the same things about the internet. Do you think they were right? Of course, the internet was everywhere. Of course, the internet knew everything. They missed a small detail. Being real doesn't mean having millions of dollars in value. So today we're asking the question Wall Street didn't want us to ask. Is the AI bubble about to burst? And if it does, what's next? Yes, now buckle up, because the answer is far more complex and interesting than you've been told, my friend. Now think about it. We are perhaps in one of the fastest wealth creating periods in human history. If you say you don't have any wealth, don't worry, friend. I don't have any yet. In the last 2 years, artificial intelligence has fallen from a strange technology to the center of the global economy. Nvidia, a company that not so long ago was primarily known for making graphics cards for gamers. Now it's worth over $2 trillion. Microsoft has poured billions of dollars into OpenAI. Google is racing to avoid losing the race. Meta is spending as if there's no tomorrow. Amazon, Apple, Oracle, everyone's in. The numbers are almost comical. Global AI investment exceeded $600 billion in 2024 alone. Companies are building data centers the size of small cities. Chips that power artificial intelligence are being snatched up like wartime supplies. Investors are pouring money into anything that has the letters Y and Z in its presentation file. It feels like it will never stop, that it will always grow. But things that feel that way have a strange habit. They love to surprise you. To understand why people are so obsessed with artificial intelligence, we need to understand what investors are buying and why. Think of it like this. It's 1849 and someone comes and says, "There's gold in California. You have two options. Either you go and search for it yourself, you go and dig with a shovel and pickaxe, and you either find it or you don't. Second option, instead of going and searching, you open a shop selling pickaxes, shovels, and boots to every digger." That's the strategy here. Right now, Nvidia is the one selling those shovels. All major AI systems like ChatGPT, Google Gemini, and Meta's Llama run on Nvidia chips, especially the GPUs, also known as graphics processors, which are incredibly capable of handling the mathematics that AI needs. Nvidia's top model, the H100, sells for around $30,000 each, and companies order them in the thousands, sometimes hundreds of thousands. Microsoft alone has committed to spending $80 billion on AI infrastructure in a single year. Google said $75 billion. Meta went even further. $65 billion on AI capital expenditures alone. These aren't small bets. They're put the whole company on the line bets. If you look at the logic a little crookedly, it makes sense. The theory is that AI will eventually automate large parts of information work, writing, coding, analytics, customer service, legal work, medical diagnosis, and companies with the infrastructure will create an unimaginable amount of value. Think of what the internet did for Amazon and mobile for Apple. Investors think AI could become 10 times more valuable, and there are still investors who still think that, my friend. ChatGPT reached 100 million users in just 2 months. It's the fastest growing app in history. Many businesses are now handling most of their tasks with artificial intelligence. The way things are done is changing, my friend. But here's where things get difficult, because there's a huge difference between this technology is real and useful and this technology deserves this valuation. And right now, the gap between these two things is very, very wide. Now let me take you to a period that will disturb you. The year is 1999. The internet is changing everything. Pets.com raises $82 million from its IPO to sell pet food. Webvan raises $375 million for grocery delivery. TheGlobe.com goes public and its stock jumps 606% on its first day. Companies with no revenue, no profit, no real business model, just a website and a .com suffix are valued at billions of dollars. It's absolutely crazy, right, friend? But in a way, everyone knows it. Because this craziness works, people keep playing. The technology-heavy stock market index Nasdaq rises by over 400% between 1995 and March 2000. 400% in 5 years. People are mortgaging their homes to buy tech stocks. CNBC anchors are becoming famous. Day trading is becoming a career. Then the music stops. By October 2002, the Nasdaq had lost 78% of its value. Trillions of dollars in wealth gone. Companies valued at billions were reduced to zero overnight. Millions of jobs were lost. It took years for the economy to recover. But, and this is the most critical point, the internet was real. It was truly transformative. The problem wasn't the technology, the problem was the timing and the valuation. The survivors, Amazon, Google, eBay, eventually became some of the most valuable companies in history. But first, they had to survive a massacre that wiped out 90% of their competitors. Now look at today's AI. The similarities are striking enough to make you nervous. It's a real, transformative technology. It exists, my friend. Irrational enthusiasm flowing in every direction. It exists, my friend. Companies being valued not by what they're earning today, but by what they can earn in the future. It exists. Venture capitalists throwing money at cash-burning startups simply because they added AI-powered to their descriptions. It exists. But there are some important differences, and this is where it gets interesting. In 1999, many companies were really just fake founders. They had nothing. Today's AI companies, at least the big ones, have real products, real users, and real revenue. OpenAI is reportedly reaching $3.7 billion in annual revenue in 2024, and its growth rate is astonishing. Nvidia's profits aren't theoretical, they are enormous and growing. Infrastructure investment isn't a fantasy. The dot-com crash was partly due to the internet arriving ahead of its time. The infrastructure wasn't ready, business models weren't perfected, and the technology couldn't deliver on its promises. In the field of artificial intelligence, some argue that the infrastructure is being built right now at an extraordinary pace and that the technology is already yielding results. But the question that nobody has been able to fully answer yet is, who is actually going to pay the price for all this, my friend? I hope we don't. I don't want to be a doomsayer here. I can almost hear you saying, then don't be. But some people smarter than me are asking some extremely uncomfortable questions, and I think they need to be addressed fairly, friend. First warning sign, the revenue gap. Companies are spending hundreds of billions of dollars on AI infrastructure, but the revenue from AI products is still a tiny fraction of that. In a report published in 2024, Goldman Sachs asked sharply, is AI spending too much and the return too little? They estimated that the AI sector needs to generate around $600 billion in revenue annually to justify its infrastructure spending. Right now, it's generating a tiny fraction of that. It's like building a 100-lane highway and only putting 10 cars on it. I wish we had the money to build a 100-lane highway, right? Second warning sign, the commodities problem. Here's a subtle point. AI models are evolving at an incredible pace, but they're also becoming cheaper at an incredible pace. When DeepSeek, a Chinese AI company, released a model that, by early 2025, rivaled American AI systems at a fraction of the claimed cost, Nvidia's stock lost nearly $600 billion in market value in a single day. In one day. That's the largest single-day market value loss in stock market history. It's a warning that the trenches around AI companies may not be as deep as everyone thinks. Third warning sign, the pickaxe and shovel problem. The pickaxe and shovel. I mentioned before, yes, you're a genius. Remember our gold rush analogy, right? Here's the dark side. Those selling pickaxes got rich regardless of whether gold was found or not, my friend. But eventually, if nobody finds gold, they'll stop buying pickaxes. Infrastructure investment at companies like Nvidia anticipates a massive demand for AI. But what if it doesn't come? Or at least not fast enough? And perhaps the most philosophical fourth warning sign, we don't yet know what the killer use case is. On the internet, this eventually manifested itself with e-commerce, social media, and search engines. On mobile, it was apps, and then the smartphone becoming your whole life. And with AI, what's the $100 trillion use case? Because right now, the best answer most people give is, it makes programmers more efficient, and it helps customer service chatbots. This might be worth hundreds of billions of dollars, but is it worth tens of trillions of dollars? If I had that much money, I'd be on vacation for the rest of my life. That question is still totally open, my friend. Let's do a little thought experiment. Let's say the skeptics are right. What would the bursting of the AI bubble actually look like? How what? Just kidding, it's not like that. The stock market would take a hard blow. A large portion of the largest companies in the S&P 500 would be hit. The startup world would be shattered because thousands of people are starting AI initiatives. This explosion would also hit the physical world. It triggers construction in the real world. New data centers, new power plants, new semiconductor factories. If the money dries up, some of those projects will be suspended. The workers and communities dependent on them will suffer. I hope it doesn't happen to us. Okay, is the AI bubble about to burst? The honest answer? I don't know. Nobody knows. We'll all see this in time. It's wrong to completely trust it. It's wrong to completely ignore it, my friends. In the midst of the dot-com crash, Jeff Bezos was asked if he was worried, and he said something that I think is more relevant now than ever. He said, I get asked very often what will change in the next decade, but I almost never get asked what won't change. What won't change is this. Intelligence, the ability to process information, solve problems, and make decisions will become more, not less, valuable. The question isn't whether AI is important. The question is whether the price we're paying for it today reflects reality or fantasy. You will decide that. I'm really curious to hear what you think in the comments. Are we in a bubble? Is this the future itself? Or both at the same time? Until the next video, stay skeptical and don't mortgage your house to buy Nvidia. If you liked my video, don't forget to like, comment and subscribe, my friends. See you in the next video, my friends. Goodbye.